Hi, and welcome to the Urban Tech VC, a podcast for urban leaders shaping the cities of tomorrow. If you love our show, do drop us a review, share it with your friends, and follow 2BX on LinkedIn or Instagram. Today, we're happy to welcome Richard, a business angel that has been investing in young companies and entrepreneurs in real estate-specific, commercial, organizational, and corporate law issues. Richard is focused in both classic real estate companies that build up existing portfolios, as well as innovative approaches and PropTechs. If you're an urban tech founder about to raise a round, do reach out to us. We'd love to connect and see if we should play together. Are you tired of always hearing about Silicon Valley VCs and not knowing what the greats of European VC are thinking? Well, no more. Head on over to eu.vc, the go-to place for everything European VC. You'll find podcasts, events, and expert-curated content from all over the EU VC scene. Well, what are you waiting for? Go to eu.vc.
Hey, Richard, thanks for being our guest today at the Urban Tech VC.
Katharina, Mark, thank you so much for extending the invitation. I can't wait to chat with you.
Yes, so can we. To introduce yourself, the way I perceived you, you describe yourself as passionate entrepreneur, a real estate lover and investor. You have managed, developed real estate family business, but you have also established your own companies in the real estate sector, and you have been an active investor in PropTech startups. So it's pretty obvious that real estate kind of flows in your veins, but it would be great if you could tell us a bit more about your story in your own words.
Excited to share my journey with you, Katharina. I have always harbored a passion for business. As a team, I was captivated by the stories of Lee Iacocca and John D. Rockefeller. I don't know if Lee Iacocca is somebody you guys know because you're a little younger than me. However, I went on to study business and law in Paris, Münster, and Leipzig. And after graduation, I joined Deutsche Telekom as a part of their group strategy department. I really had an amazing time there working with great colleagues in Bonn. I even got to participate in the company's internal MBA program, where I got to visit Madrid frequently for studies and to save the city's culture. I really had a great time. But then in 2006, my father asked me to help with our family's real estate business that had been in operation for over 160 years.
Wow.
Building everything from churches to hospitals to apartment buildings. My father had shifted the focus of our company to very high quality apartment development in the Düsseldorf area in the 70s. And with my brothers, we transformed the business into maybe the leading very high quality residential developer in Germany, with offices in Berlin, Düsseldorf, and Hamburg, and also our hometown Kempen, which is near Düsseldorf. Initially, there I focused on finance and customer operations, which was pretty much the areas that my father really wasn't interested in and where he wanted me to help. And then after the financial crisis, 2008, 2009, we were very worried about inflation. So we diversified into buying existing multifamily apartments as a hedge, and the acquisition of those properties became another focus area for me. Then in 2014, I envisioned diversifying further into commercial development, but my family, they wanted to stick to residential. They thought, we are successful in residential. Why do something else? So I teamed up with a very good friend of mine, Andreas Barnes, and started a new company focused on buying and renovating, and also newly built commercial properties. We partnered with family offices, as we didn't have enough equity to buy everything ourselves. So I was in charge of fundraising and investor relations. Maybe you guys can relate to that as VCs.
Kind of.
A little bit, yeah.
And this is also where my time as a business angel started, because one of our investors, he had just IPO'd his company for in $1 billion exit at the Nasdaq, and he was eager to invest in real estate. I was always interested in the startup environment. It fascinated me, but I really didn't have any access to it. So I asked him, if I invest in real estate with you, would you, help me invest in startups? So since 2015, I have done that. I have invested in more than 20 startups, mostly in the real estate sector, since that is the area where I believe I can add the greatest value to the founders. As you can see, I'm a pretty curious person who loves taking on new challenges. It's definitely a standout aspect of my character. But it led me to realize in 2018 that there was just too much on my plate. I had taken on more than 20 management positions at one time, and this just wasn't working anymore. I had small kids back then and too many positions. So in 2018, I decided to step back from the day-to-day operations. And today I mainly focus on helping my family business, the companies that I co-founded, and also the startups that I'm involved in from an active shareholder perspective.
Super interesting. I'm curious because you mentioned a few very different cities where you lived. You mentioned Paris, you mentioned Leipzig, Madrid. You have offices with the family businesses in Hamburg, etc. So what city stands out for you or stood out? What was kind of fascinating for you?
Well, the city that I love most is Paris.
Because of the traffic, probably not.
No, not really. I really had, one of my best years in Paris. It was an exchange year from Leipzig Graduate School of Management, and I managed to organize my schedule in a way that I never had any classes after, before 11 and after 2, I think. So
That's nice.
I, didn't really have to do anything, and we really had a great time there, and I was able to relax and enjoy the city. And I loved living there. I loved going to university there, and I still travel there quite a lot. I go there at least once a year with my wife, actually without the kids, as like a romantic getaway thing. And it just fascinates me, and I definitely want to live there at some point, or at least have an apartment there to spend some months each year there.
Yeah. You travel by train or by plane? If you go
we
to Paris?
usually just go by car.
Oh, okay, yeah, okay.
But we've tried everything. That the train leaves very early in the morning, at Düsseldorf, so that doesn't work that well. And plane is doesn't save any time, so we usually just take the car.
You mentioned that at a certain point in time you joined your family business, and I think it's very interesting. Was that always your purpose and your idea? Was it always your plan to, at some point in your professional life, go back to your family business, or was it more because the request came and there was the urge or the need for your skills and abilities in the family business, or did you plan to do so?
No, I never really planned to go into the family business. Our family business was much smaller back then. So it wasn't really, a size that you would say, you need more than, one managing director. Mm-hmm. So my father always did that. He had a very good idea at the end of the 90s, beginning of the 2000s, because back then, if you look at, what home builders built in Germany, it was, the architecture was very boring. So a lot of people wanted to live in old buildings, with the high ceilings and the great facades and everything. But his idea was to build new with the services, with a garage with parking spaces and elevator and all these kinds of things, but buildings which looked like old buildings. So this was really a new product on the German market, and that went very well. And then at some point, the company was growing very fast, and he asked me to join him. But I everything I did in my career before that wasn't very planned, because I didn't want to go to Deutsche Telekom really before. But I got a great offer by an investment bank, but I didn't want to work too much, so I didn't want to go into investment banking. And my last internship had been with Deutsche Telekom before that, and I didn't want to turn down Morgan Stanley and then not have any job at all. So I called Deutsche Telekom, asked them, hey, you guys have a job for me? Because I got this offer. I only have 2 weeks to decide. And this is how I ended up at Deutsche Telekom.
I mean, you mentioned, right? It has been like, or what I consider interesting is that you moved from what back then was still already a big but yet up and coming industry, the telecommunication industry, right, with Deutsche Telekom, and you moved to what you could basically say boring brick and mortar industry, yet the biggest asset class in the world, right? Real estate is everywhere, so. And now you've been quite a while in the real estate sector already, right? So from your perspective, what is your take on let's say the digital transformation of the real estate industry that you have already experienced in the past, and what would you consider the biggest challenges, also given the fact that you somewhat started your professional career in the digital environment and moved to I would guess even back then, or especially back then, a much less digital environment in the real estate world.
When I look at the digitization of the real estate industry, it strikes me that most startups that have been successful have really looked at the parts of the value chain that are easy to digitize. For example, if you look at broker tech, this area is highly digitized. But when you look at the way we actually construct a building today, there's not very much that has happened. There are some startups in that area, but they haven't really gained any relevant market share. They've built a few buildings or renovated a few buildings with industrialized solutions, but it hasn't had a significant impact up till now. So I think this is the big challenge, is to really go there where it's difficult to digitize, and to help us build cheaper. Because right now we are in a very difficult spot in Germany. Building new is just not working. Most construction sites are just closed down. Nobody starts building anything new. And this is a huge problem, since we don't have enough apartments in the cities. And I think there's going to be a social problem as well, because people can't afford to pay higher rents. People can't afford to pay more for apartments. So we really need new buildings. And for that, we need to digitize better, find better solutions.
If you look at the construction costs, maybe, right? So how much, let's say, what is in Düsseldorf, it's your home market, right? What do you pay for a square meter of newly constructed buildings at the moment? Do you have any range or idea?
Yes, I just came from a meeting where we discussed, how much it costs to build a new property. And I would say below 5,000 euros per square meter, you can build anything in Düsseldorf.
Wow. Okay.
Right. This includes the ground. This includes, the architect, etc. This is all in. But if you think that, people usually they want to pay like 10, 12 euros per square meter per month, that's 150 euros per year.
Yeah.
This is 3% of the 5,000 that, the project costs. And, this 3% is not a net yield, right?
Yeah.
You still have to pay maintenance, etc. So, and if you get a 2.5% here, if you buy a German government bond, why would you invest in real estate right now?
Oh yeah, totally.
And this is really, one of the biggest issues in Germany right now.
And at what point do you think PropTech companies or startups could lower those costs per square meter? Because you mentioned it at the beginning, right? At the moment, it's all about cost, which is an interesting fact, because now with rising interest rates, suddenly the pressure on real estate industry is increasing, right? But how much of this cost, or how much of the industry can actually be digitized, in your opinion?
It's really difficult to say. I mean, there are companies out there like Gropius or EcoWorks.
Yeah.
And what they are trying to do is they try to industrialize the construction process. They don't want to, construct on site, but they want to pre-configure the components and then, build much faster and with lower costs. But right now, I don't believe that their solutions are actually cheaper than, conventional construction. And I don't really know if they can be much cheaper and how much they have to scale to become cheaper. I think this is an open question at this moment. And I don't think this is going to be possible in the next 2 or 3 years. So I think the only way that we can, build cheaper or actually build in Germany right now is if the government actually, gives more subsidies. This would from my perspective, that's the only short-term solution. And then on a mid to long term, we can think about these, industrialized building solutions.
Or alter regulation, right? I mean, this is also a huge problem, right? But maybe one thing, if I'd be a PropTech right now trying to sell you my solution, what kind of products are you actually on the real estate side of your business looking for? What kind of products would you immediately buy? So what can I do to position myself towards real estate companies as a PropTech startup right now in the current market environment? In your opinion, where are the biggest needs?
That really depends on the specific customer segment you're looking at. As a founder in the real estate industry, it's important to recognize that the market is massive and incredibly diverse. The challenges faced by different market participants, such as private landlords or professional asset managers or entrepreneurs like me, vary greatly. For example, a private landlord may be looking for a simple property management software, while a professional asset manager may need a new software that allows them to track and budget maintenance costs, ESG reporting, or has the ability to integrate with existing systems. These differences have significant implications for the features of a product, as well as the profitability and effectiveness of different marketing and sales channels. My advice to founders is to carefully consider not only the problem they want to solve, but also for whom you're solving it.
And Richard, would you say that is the most common mistake founders then do, not knowing whom to target?
I would say that's one of the biggest mistakes. Right? Another big mistake that I see often is that founders underestimate the existing market players. Everybody talks about, how not digitized the real estate industry is, or how not sophisticated it maybe is in some areas. While there is a lot of room for improvement and professionalization and digitization, there are also many smart market participants who have already put a lot of thought into their strategies. Before launching a product, take the time to listen and really, understand the solutions that are already on the market. And last but not least, look at competitors in the market segments that you want to target. There is really a lot of crowded areas in PropTech right now.
You mentioned that there are many smart market participants already, but how could I as founder find those? What would you say, or what is a recommendation of yours?
Well, a first step could be, just a Google search, right? It sounds really easy, but I don't think a lot of people have done that. And the second thing would be talk to some people from the industry before you actually have your MVP, and ask them, do you think that this is really something people are looking for?
And would you say there are any signs that a market participant is not or is willing to digitize more than most of the others? Because I think this is so hard, and it's really hard to recognize that or to see that from the outside.
I think it's very difficult to talk about this in general terms, because as I said, the real estate industry is huge. So you really have to think about what area are you talking about. As you know, ESG is a huge topic in the industry, and there are some market participants who have to deal with that. Those are market participants who have to do ESG reporting, for example. They have to find a solution. So it's much easier to sell to them than to a private landlord. Most private landlords, they've heard about ESG reporting, but they're not going to do anything about it. And my experience is it's always easier to sell a must-have than a nice-to-have, especially in a market environment as we are seeing it today, which is, at least for the real estate sector, very difficult.
I would like to look now at your view as business angel. Now you see all those prop techs, and I guess you are kind of a famous prop tech investor out there. So people come to you and want to like convince you of investing in their company. But what kind of companies or founding teams, characters are you looking for? What is important when you screen all those pitch decks? I assume you do. I don't know if you do that, but I just assume here.
When evaluating a potential investment opportunity, I consider a combination of factors. First, I assess the general professionalism of the presentation, including the structure of the pitch deck, the quality of the argumentation, and the appearance of the website. It's really striking to see that there are very many. There are a lot of pitch decks out there that I don't really understand. They don't have a conclusive argument that I would understand. Maybe it's me, but this usually eliminates. Well, this first appearance usually eliminates 2/3 of the options. Mm-hmm. Right. Then I look at the background and experience of the team. I also consider whether I like the product. Some industries may seem boring to me, while others are just too complex to invest in. As a business angel, I can't do research for a week. I usually decide in 1 day or 2, right? So it has to be understandable. And there are many other factors to consider, including who introduced me to the founders. I will very rarely invest in an idea that was pitched without any relationship, right? If I just get it via LinkedIn, it's not probable that I will invest.
May I ask something with regards to that? Because this is something that we always discuss, right? Obviously, if you have a good quality intro, it increases the likelihood of you investing. Also with us, it's the same, right? Yep. On the other hand, you have a bias there, right? Because you rely on your network and what flows into your network, and might miss out on opportunities that can diversify return potential, but also risk profile of your portfolio. So what is your take on that? Are you aware of that? Obviously you feel more comfortable because there's more trust when we get a warm intro. But for us, it's something we constantly discuss, that we need to be very cautious when it comes to this, let's say, network bias, right?
I get your point. I think it's valid. Well, I believe if I get a pitch deck from somebody I know, it is probable that less people have received it than if I just get it over LinkedIn, right? This is the reason why, I look closer at things that people, who I trust have introduced me to. But sure, there are also great founders out there who maybe don't have a good network, but, apart from that, they're great founders, right?
Yeah.
So I might miss out on opportunities there. But, to be honest, one of my biggest challenges as a business angel is that I don't have enough time to look through pitch decks and talk to founders.
Yeah,
so
I get that.
You have to, find a quick way to get a first assessment.
The way I try to tackle that is to work on the bias of my own network, to really try to build a pretty diverse network, because people addressing me on LinkedIn, for example, are totally different than people addressing Mark, for example. A lot of women, female founding teams do address me without any intro, and I'm happy they do, because most of them don't have the network to get a warm intro. So it's really kind of important to look at the network, but I totally get it. It's not your full-time job. You don't have time to look at every pitch deck, so you need kind of a prioritization scheme there.
Yeah,
that's interesting.
I think since this is a big challenge for business angels, or at least for business angels like me, for whom this is just one thing that they do. I can allocate maybe 10 or 20% of my time to investing in startups. This would also be, we really have to find structures in how we can deal with that. What I'm trying to do right now is to find a structure where someone else, screens investments for me, does like a pre-screening. And I think this would also be, something to look at for other business angels.
I mean, you probably have a network of a lot of other business angels, and to share the amount of work there is always a good thing. I want to come back to a point you mentioned earlier when it was about the general professionalism of the presentation. You mentioned the presentation itself, and you mentioned the website, and that that combination eliminates 2/3 of the options. I really want to highlight that to everyone, every founder listening to it. It's so weird if you look at a website and it says like totally something totally different than what you receive in a pitch deck. You are so lost, and then you just decide, okay, it's not worth it, because it has to be congruent there.
I mean, our advice always is when it comes to that, right? Especially in pre-seed and seed stage, if you're pre-product or pre-revenue, then rather you have just a pitch deck and no website, then you have a mismatch between pitch deck and website. This is like one of the most, and it's normal that you have a lot of product iterations, right? Early on.
Yeah.
But so that there is basically, at some point there will be a mismatch, but as an investor, you always you take every data point you get, right? But to continue a little bit, like if you're looking at the 1/3 that is remaining after your first screening, and that is like fulfills your criteria of general professionalism and topic fit that you mentioned, what are you looking for in a team, and particularly, and also in the structure of a round, right? When we talk about cap tables and team, and what is important to you for you to convince you to invest?
Well, if I look at the team first, it's always an upside if the founders have, if they are serial founders or have started another startup before. In the best case, even with a good exit, right? But this is not a must-have. When I also look at background, like university background, for example, in Predium, they all studied together at the CDT in Munich, which has a great reputation. This is something like I'm looking for. I also, don't like to invest in startups that only have one founder or one major founder. Sometimes you have one founder with 80% share and the other just 3%. I don't like that. I really don't want to depend just on one person. When looking at the round, it's always important for me that there's a lead investor who has done the due diligence, because I don't have time or resources to do a due diligence myself. So usually there would be somebody like you guys who has the resources to do that. And other than that, it's always important that the founders still have enough shares, right? That I feel like they're incentivized enough.
Is there a hard number for you at the stage where you invest? Or is it more like you have to figure it out in discussion with them?
It really depends on the round, right? Mm-hmm. If you're talking about very early stage startups, they should have more than 50% shares, right?
Yeah, I agree.
But if you're talking about a startup with a valuation over $100 million, they could be incentivized enough if they have 15%, right? But it's also always a topic, right? Yeah. I also look at their salaries. Right. I like it, when the salaries are high enough that everybody, doesn't have to worry about their bills every day, but they shouldn't work for the salaries first, but for, the potential upside that they get from an exit.
I think this can vary over time a little bit, right? We've seen, I would say most of it. Maybe one more question that goes a little bit in the direction of failures or learnings, right? Depending on how you frame it. So let's put it positively. What was your biggest learning so far from your activity as a business angel?
The first thing that I realized was that the strengths of the founders can be very different from my own strengths. Just like in life everywhere, people are very different, right? And it's not that important that I got to get along too well with everybody. I don't have to be friends with everybody, right? So I would suggest, not looking too much on, sympathy, but rather, on getting things done in the history of the company. And the second thing that I learned was that, never underestimate the impact of luck on an investment, or for that matter, bad luck. I've, met great founders who've really done an amazing job, but, just because of external events, they, really didn't have a chance looking back, right? As a business angels, you always have to have, a few eggs in the basket.
Maybe the last question before we go to our checkout, something that I would guess a lot of our listeners would be interested in. Are you actively investing at the moment or this year as a business angel, or are you focusing more on your portfolios or other sides of your business?
No, I'm investing, and actually I'm investing much more active than I was in the last years, because what really strikes me is that these are difficult times in VC as in real estate from an investment perspective, right? But there are a lot of people who, have the liquidity and still don't invest. And I don't really understand that, because valuations have gone down. There are much better possibilities, opportunities out there than there were a year or two ago. And everybody's sitting on cash, right? There are a lot of VC funds with a lot of equity that hasn't been invested yet. So I'm investing more because I just feel like my chances are much better, right? There's less competition, and I actually like this time in a way, right? It's really exciting.
100%. We think this year is going to be an amazing year. Also, midterm speaking, probably 2023, also 2024 will be fantastic vintages to invest in, to build a portfolio. 100% agree. And I mean, also, to be honest, the odds and the dynamics are a little bit more in favor of investors at the moment. So the market dynamics are shifting a little bit back to normal, which is also something that you could describe as a little bit common sense coming back to the market, and also to the valuations, a little bit more realistic expectations. Good to hear that you're investing. Yeah, sure.
And I'd like to add one thing. One thing that is really a big plus for founders in the real estate business is that you have another source of funding, right? In real estate, there are a lot of companies or individuals who also invest in startups, right? It's a market that, with a lot of equity. I know it's a difficult time, but still there are a lot of people out there or companies out there who have liquidity. And what I've seen from my portfolio is that, especially in difficult times where VCs are, a little hesitant in, doing a follow-on round, it's often the real estate players who keep funding the company.
Yep.
So I really want to, break a leg for founders to go into the real estate space.
Very,
Awesome.
very valid point. Yeah, awesome. Thank you.
Thanks for sharing, Richard. But unfortunately, we have to come to an end. And we do, Mark and I, love to end the episodes with a quick fire round. So now it's all about speed and gut feeling. So only a few seconds to answer, and don't sneak out of it answering both, okay? Try to answer this or that. So 10 questions and a fast answer. Startup or corporate?
Definitely startup. After 16 years as an entrepreneur, I couldn't adjust to a corporate culture.
Halloween or Christmas?
Christmas.
Build new or modernize?
I think building new is much easier, but renovating is much more important for the industry and society. So I would say renovate.
Passion or stability?
Stability, if I have to choose.
Now it's perhaps a bit of connected to that, disruptive or keeping with tradition?
Some things should be preserved, others have to be disrupted.
Is that kind of a both answer? But that's fine.
Rather no company or bad company?
No company, definitely. A bad company makes a lot of work and doesn't lead anywhere. So no company.
High-rise or low-rise building?
Well, I can't answer both, right?
No.
Well, in Germany, I would say low rise. In other cities, it's maybe different.
Angry client or angry coworker?
Angry coworker. You have to keep the customers happy.
Exactly. Yeah.
Real estate development or startup investment?
I only have 10 seconds, right?
Yeah.
Right now, startup investments.
Okay. Last one, I think, right?
Yep.
Yeah. High quality one. Silly hats or silly socks?
I'll take the hats because I don't have that much hair, so that would help a little bit.
Oh, thank you for joining. Richard, it was really fun, and I hope it was fine because we said we would try this or that question generator in our checkouts from now on to make it a bit more fun. So sorry for that stupid questions, but it was kind of
You
nice.
were actually the first one we tried it on, and yeah.
Oh, thank you very much for making me the first one.
The first guest, at least. We did it ourselves. And
Oh yeah, right. Yeah. Right. The first guest. Yeah.
But yeah.
All right, Katharina. Mark, thanks a lot. It was fun talking to you.
Thank you.
All the best.
Bye-bye.
Thank you. All the best.
Thank you for listening to this week's episode of the Urban Tech VC, a podcast for urban leaders shaping the cities of tomorrow. If you love our show, do drop us a review, share it with your friends, and follow 2BX on LinkedIn or Instagram. And if you are about to raise a round, drop us a note at LinkedIn or via email at idea@2bx.vc. Let's have a talk and see where we can help. Are you tired of always hearing about Silicon Valley VCs and not knowing what the greats of European VC are thinking? Well, no more. Head on over to eu.vc, the go-to place for everything European VC. You'll find podcasts, events, and expert-curated content from all over the EU VC scene. Well, what are you waiting for? Go to eu.vc.